Yes, well, let's start out with import prices, up 0.7 for the month of July. That's a little hotter than expected. It follows up 1.4, and that was interesting because that was the highest level since April of 2011. And if we look at ex-petroleum, up 0.2. If we look at year over year, they were down 3.3 as expected versus minus 3.8 in June. Export prices, they were up 0.8, double expectations. In the rearview mirror, up 1.4. And on export prices, that was the highest at 1.4 since 2011 as well. Finally, if we look at year over year export prices, down 4.4% as expected. All right, the money ball. We break our record. We do not go to 22 weeks above 1 million on initial claims. The record stops at 21 weeks because it's 963,000 from a slightly revised 1.191 million. And if we look at continuing claims, they're better than expected, but not by much. 15,486,000, definitely lower than the 16 million plus from last week, but pretty much as expected, arguably a little bit, only a bit lower. Most were looking for about 15.9, 15.8 million. So really, initial claims is the one that really overperformed with regard to that dip below 1 million. And in terms of interest rates, consider this, we're at 68 basis points in a 10, unchanged from yesterday. However, 51 basis points is the all-time low yield close from about a week and a half ago. So we are up a bit. There is a cushion there. The yield curve's been hanging above 50 on steepness. And when you look at inflation and deflation around the globe, ours has been a bit hotter. Germany's has been a bit cooler. Their wholesale price index, which is kind of like PPI on a year-over-year basis, was down negative for the 5th month in a row. And if you looked at their harmonized CPI month over month, it was down 0.5%. So we want to pay close attention to some of the changing dynamics and equivalents of metrics here versus overseas.